Welcome everyone to our daily Forex market analysis call, and this is in preparation for trading on March 14th, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, so as usual, we'll start off by taking a look at our economic calendar first. So the big thing that happened today, two main things that happened, one planned, one not so planned. So first thing was the CPI numbers for the US. So the numbers came in exactly as expected. There was no change whatsoever. However, we saw that as soon as the CPI numbers came in, US dollar weakened across the board. So everything jumped up against the US dollar. So just to provide some context as to what happened there, the data came in as expected. So normally when the data comes in as expected, it's neutral and things will basically carry on the way they were prior to the news coming out. In this case, however, it was almost like a negative for the US dollar because it seems like the market was expecting better than what was forecasted for the CPI numbers. So that's why we saw everything else jump up against the US dollar. So it was basically considered a negative. So because market was expecting a bigger positive number, when it came in line with expectation, it was considered negative. And that's how, from market sentiment perspective, and that's how we saw the US dollar weaken across the board. Another main thing that happened during this time was that was also the time when announcement came out of the US in terms of, let's take a look at here. So we saw that there was an announcement made about replacing one of the, President Trump, so he talked about two members. So in the last week, two members of President Trump's administration are being replaced. Cohen is one of them, and then Secretary of State was the one that got replaced, or the announcement was made today. So that's what really killed the US dollar, those announcements. So when there's political unrest, it's bad for the currency. Markets wants to see stable environment, both economically as well as politically. And when we get these announcements out of left field that nobody's really expecting, market will react negatively to it. And that's why we saw pound jumped up, euro jumped up, and dollar yen dropped because of this kind of announcement. So it was a double whammy in terms of the US dollar. CPI numbers coming in as expected was not good enough for the market for the US dollar, because the problem with the reason why market reacted like that is because inflation, CPI numbers, which are basically inflation numbers, when the Fed is raising rates, or when the central bank is raising rates, market expects to see better inflation numbers. So England, UK is getting really good inflation numbers. So they are at 3%, whereas US is at 0.2%, right? Bank of England has not been raising rates. When inflation numbers come in positive, there is pressure on the central bank to raise rates. However, when the inflation numbers are declining, there is pressure on the central bank to cut rates or not do anything. So with the US, the economy has been doing well. The employment numbers are coming in well. Everything, all the data that's coming in has been positive. However, the inflation is one of the things that central banks pay a lot of attention to. And that's one of the numbers, a key number that has been coming in below expectations for the US. So that's why this whole disconnect kind of comes into play. So right now, because the inflation numbers are not coming in better than expected, or they're not increasing as much as the central bank or the market likes to see. So central banks usually want to see inflation numbers between 2 to 3%, and we are at 0.2%, right? So this is where the disconnect happens. So if the central bank does not see inflation going up, it becomes difficult to raise rates. So Fed has said that they're looking to potentially do 2 to 3 interest rate hikes this year. And if they don't see the inflation going up, or if the numbers start coming out not quite as good as the market expects or the Fed expects, then they're likely to not raise rates. And that's where the market sentiment turns sour after seeing the CPI numbers, inflation numbers, because now the market is really not confident that Fed will do interest rate hike. And then to throw the political turmoil with that was just a double negative for the US dollar, and hence we saw the US dollar decline. Now, the commodity currencies did not fare that well against the US dollar, and we'll take a look at that when we come to the charts. But in terms of our news, we have Draghi speaking tomorrow. And if we look at, so I would encourage you to keep an eye on your news feed. So we have there are apparently, the news feed was saying that there are multiple speakers from the Eurozone who are speaking. So keep an eye out on your news feed, even though Forex Factory only shows Draghi speaking, which is very important. Anytime there's central banker speaking, we have to pay attention because it usually creates volatility in the market. But there are other speakers as well, so we'll have to be mindful of that. So we'll keep an eye out for that. So Euro basically may be volatile tomorrow. Rest of it, there's really no other important news. And the problem with not having important news is that it does not create market sentiment, and it just creates chop. So last week, basically the entire week was just choppy London trading conditions, and then we saw news come out in the US session which drove market sentiment. So London session ended up being a really, really choppy, and that's what we saw today as well. It's just back and forth within that 30 pip range that you can't really do much with. So that's what we saw today. And so going forward, I would, so we'll see how this goes. And we'll see what we can do here. But if we do have data in the US session, retail sales numbers, again, a key indicator that the Fed will pay attention to in their, to see whether they will raise rates or not. So if Fed is paying attention to that, market will pay attention to that. It's a very important number coming up. And then we have crude oil inventories, which will be important for the US as well as Canada or Canadian dollar. Oh, another thing I forgot to mention. We saw Bank of Canada, Governor Pola spoke as well, and that was negative for Canadian dollar. And we saw US dollar go up, CAD yen went down. The reason for that was basically Governor Pola said that the economic growth in Canada is okay. They are not too concerned about it. He did not have any comments as to how the NAFTA agreement or lack thereof would create, what kind of situation that would create for Canada. One thing they did say, or Polo said, was that they're not looking to do any other interest rate hikes at this moment. So that was taken as a negative comment. So when there's talk of interest rate hikes, so like we're seeing from Bank of England and Euro, where they're talking about changing the monetary policy, in terms of cutting back on the asset purchase program, all of those are good for the currency. When we talk about like Fed, for example, data not coming in line with expectation, that creates negative sentiment towards interest rate hikes. And that's why we saw the US dollar drop. Same thing for Canada. When they talk about not doing any more interest rate hikes, that means that creates a negative sentiment and the currency drops. So that's what we saw for the Canadian dollar as well. So keep that in mind. And in the Asian session, we have GDP numbers for New Zealand dollar, which of course will be important. And then just going back here, we do have Chinese industrial production numbers. So China and Australia and New Zealand are big partners, trade partners. So if Chinese economy is not doing well, that means they cannot use raw materials from Australia and New Zealand, and it would have an negative impact on those countries or the currencies for those countries. So just keep that in mind. Even though we don't trade Chinese yuan, industrial production numbers will have an impact on Australian dollar and New Zealand dollar. So let's go on to the charts here and we'll take a look. So pound yen looks like a big, huge move up here. But let's start with our normal. So we'll start off with euro. Big, huge move up here for the euro. Very bullish move. So we're looking at another move to the upside. The target for this will be 124.50 back into the high here. So very, very bullish close here and looking for continuation of that move. So this is where we were. We saw it drop and then it stayed here for the last 2-3 days, finally pushed through, and we are back into this previous support and resistance area. So we've seen a hike and now I'm looking for consolidation. So let me so we have this type of thing. This is what I'm looking for. It could, like I would look for a pullback into the pivot point and then a further move up. We could even get that, basically pull back all the way into 123.50. But at this point, it doesn't look like we'll get that big of a pullback. Right now, it just looks like price is consolidating sideways. So we may see one of these and then move to the upside and looking for targeting the previous high here at 124.50 level. So the bias is to the upside for euro dollar. Pound dollar, same story here. We saw a big move to the upside and now we are into this next support and resistance level, but the bias is to the upside and looking for price to move up higher now. And the target would be 140.70 level. So if we come back here, same story. We saw price consolidating here for the entire London session. It didn't really do much, just went choppy side to side. So now we have seen a move up. Now it's consolidating, looking for it to pull back into this previous support and resistance, which is also the pivot point, and then looking for another move to the upside. So the bias for pound dollar is also to the upside. The target would be 140.70. Again, I will look for a break of the high, but overall the bias is to the upside. So same thing here, price broke through this resistance, went to the next one that we had looked at yesterday, and now I would be looking for a break and targeting the next support and resistance level at 140.70 level. So the bias is to the upside. Commodity currencies, on the other hand, were slightly different. So we saw, let's take a quick look before we get into commodity currencies. Let's take a quick look at oil here. So let's take a look at gold first, and then we'll take a look at oil. Gold here, we have a bullish pin bar, so I would be looking for a further move to the upside, and gold is what kept Aussie a little bit more bid than was some of the other ones. And oil here, we saw a drop in oil. So that is bad for Canadian dollar. Canadian dollar and oil are related. Aussie and gold are related as well. So oil, the day closed lower. Looks like I would be looking for a drop in oil here as well. For this one, it closed up high. So we have 3 days of pins into this bottom, which is also a major support and resistance level. So the next move for gold would be to the upside, essentially. Now, having said that, which means it put Aussie into an interesting position. So let's go take a look at our commodity currencies. So Aussie, like I said, is related to gold. Aussie had a bearish close on the day. So gold is inversely related to US dollar. So gold goes up, US dollar goes down, or vice versa. US dollar drops, gold goes up, which is what we saw today. With Aussie here, we have a bearish pin bar. I would be looking for a drop here for Aussie. So the first target here would be 78.40 level. And the second target would be 7,800, so 0.7800 level. So I'm looking for price to drop here. However, there is this important support and resistance level here as 78.40 level. So if the price does not break below this, we could see it bounce back to the upside. So that's something we have to be mindful of. We could see one of these. So be careful with that one. Keep an eye on gold, how gold is doing, because Aussie tends to be related to that. But overall, the bias for Aussie is to the downside. And once we clear that 78.40 level, I'm looking for 7,800 as the next target to the downside. New Zealand dollar here. New Zealand dollar, we saw a push to the upside. So we had a bearish signal here that got invalidated yesterday. So this did not play out as expected. It actually pushed up higher when, based on the daily, we were looking for it to drop. So in terms of the New Zealand dollar here, the bias here, this makes it neutral. So we have seen the price go into the next support and resistance level into 73.40, and now we are seeing a rejection here. So the bias is neutral now for New Zealand dollar. So if you take a look at 1 hour chart here, this is where we are sitting. So I am looking for price to essentially drop on this one. So what I'm looking for is, so right now this is where we are. Price came into previous resistance, and which is now acting as support, and it bounced off of the New Zealand dollar. So here I am looking to see this type of a move back into this previous support and resistance level, which is also our S1 level, and then potentially go up from there. So the bias is neutral. So whereas with Aussie, the bias is to the downside, New Zealand dollar is still neutral. So we had a nice pin bar here, and since then it has dropped a little bit. But the bias is neutral here for me, because I'm looking at this support and resistance level, and it looks like it is struggling with that. So what I'm saying is I'm looking for it to come lower. But we have to be careful with this one. So I'm looking for price to drop into this 72.80 level or 90 level, basically to test the bottom of this candle. So New Zealand still looking for a drop back into 72.90 level, which is the S1 level. So bias is still to the downside. So I'm still holding on to that trade here, and I am looking for it to come back lower. So I was in this trade earlier. So I'm still in it, and I am looking for it to drop, come back lower here. So that's what my bias is for the New Zealand dollar. Aussie, however, right now is better. Dollar CAD again, huge move to the upside with this one, and overall biases to the upside. So this is where markets are a little more volatile than I would like them to be. So right now, the weird thing is it's either dead markets, like we sat throughout the London session, nothing at all, and then all of a sudden volatility sort of went through the roof. So during these times, I highly caution to keep the trade size small, like as small as you can possibly get it to be, or do demo trading, because markets are not aligned right now. So right now we have euro and pound going up, Aussie and New Zealand dollar going down, and then Canadian dollar CAD is pushing up as well. So on one hand, US dollar is strong against the commodity currencies. On the other hand, US dollar is weaker against the risk currencies. But then yen, which is also a safe haven currency, and Swiss franc, so they're just not aligned. Yen is weak, Swiss franc is kind of in the middle, and US dollar is all over the place. So things are not exactly aligned right now, and which makes it very difficult to trade, because things either don't move at all or they move really, really fast. So that's what's going on. So for now, dollar CAD, big, huge move to the upside. So with this one, I would look for a bit of a pullback here. It would be nice to see a pullback into 12900, because that's previous support and resistance level, very, very strong support and resistance level. I would like to see that pull back into 12900 and then price holds and looking for a price to move up higher. Based on the daily candle close, that looks very bullish. And we are into resistance here, the previous resistance level. From there, we are looking at 130.50 level to the upside. So the bias is bullish for dollar CAD, looking at 130.50 level to the upside. So bias is to the upside for dollar CAD. Euro Swiss franc, absolutely small move in a very, very tight range bound market. Looks like price is not willing to drop below that. We have a neutral to bullish candle close here. So I would be looking for price to move up higher. So we could get one of these and then go test the high here into 1.1750 level. So this looks, Euro Swiss franc looks bullish. Pound Swiss franc, it is struggling right now with the high at 132.00. So we need to see a break of that level. It's been sideways for the last couple of days. So the bias is still bullish because it's pushing into that level. So if we take a look, it looks like a bit of a triangle here. So we have this level and then price has been pushing into the high here. So this is our triangle if we take a sort of look at that. When this is an ascending triangle, so with ascending triangle, we're looking for price to break out to the upside and then move up higher. So that's from the technical perspective. But we are into resistance here at 132.00, which is an important resistance level. So we have to see a break of this before going long in this one. So bias is to the upside. Next target would be at 133.00. There could be an intermediate target in between here, right into this level here, which is 132.50. So let's say first target 132.50, second target 133.00. Bias is to the upside. Do need to see a break of 132.00 for it to continue higher though. Dollar Swiss franc. Dollar Swiss franc was a nice drop and looks like a couple of our members took this dollar Swiss franc trade to the downside here. It's still holding low. So let's take a look at the daily first. Close to the downside. Yesterday we were expecting a buy close. We were expecting a drop. We did see a drop. Now we are into the support level. So this is an important support level. However, US dollar is weak at the moment. So what that means is that the pressure is to the downside and we could see another move to the downside. The bias would be to the downside with the 93.50 as our target to the downside. But again, with every time we have a pair that's into resistance or support, we have to see a break. So I would like to see a break of this 94.20 level and then look for a further move to the downside. So with this one here, looks like we could get a continuation here. So same thing that I drew for dollar yen earlier today. We could get a similar move like this back into 93.70 or 93.50 level. So bias is to the downside and looking for price to drop further. Pound yen here. Pound yen came right into, it dropped, but the candle close is very bullish for the day. So pound dollar closed bullish and pound yen closed bullish as well. We did see a pullback from the high here. Price pulled back into the previous support and resistance area. And now we are looking for a retest of the high here. So price is pushing up higher. So first, I would like to see a break of 149.36 level here, but the bias is to the upside. I'm looking at 150.80 level all the way up here. There is an interim support and resistance level at 150. So first target would be 150, second target would be 150.80. Right now it looks bullish. We do have, I believe, Bank of Japan. Let me take a quick look. Or did that? No, the monetary policy meeting minutes came out already. Okay, so we're looking at a bullish move here. First target 149.36, second 150, then 150.80 to the upside. Again, first I would like to see a break of the high before committing to a full-on position to the upside. From 1 hour perspective, we can see from our 5-minute perspective, we can see there's this huge move, likely on Bank of Japan meeting minutes, which pushed things up. And but right now we're looking for price to move. So it came right into, so if you remember the pivot points lesson, with pivot points, if the trend is to the upside, we see a pullback into pivot and then bounce up, pull back into pivot, bounce up, pull back into pivot, bounce up. And that's what we are seeing with this scenario here. We are in a bit of an uptrend. Price is pulling into pivot point and it is pushing up. So pivot point is also our 38% retracement level. And we know that if the price doesn't pull back more than 50%, it's still considered in an uptrend. So uptrend is still in place, so bias is to the upside. Euro yen, same thing here. We saw price close up quite bullish. And now I am looking for price to move up higher. 133.00 would be the target to the upside. So it looks like price pulled back and then pushed up higher. And if we take a look right into our pivot point, into previous support and resistance level, and now it is pushing up higher. So the buy still remains to the upside for both euro yen and pound yen. Dollar yen here. Dollar yen has been interesting. So we have a pin bar here, but it does have that bullishness in it still. And with yen crosses pushing up across the board, this one, even though we have rejection of this level, it's not as bearish as I would like to see it. So and then we have to understand the yen fundamentals as well. So right now, the yen fundamentals that are playing out are not so much from Bank of Japan, even though Bank of Japan hasn't really changed their monetary policy status. They're keeping the monetary policy the way it is. So what's going on here is that North Korea wants to have talks with the U.S. and they have done a complete 180 from their previous stance of we're going to bomb everyone to no, let's have a talk and we're going to denuclearize. So that's a completely about face in their stance. So just the fact that they're open to talking about it, having a conversation is really, really big for Japanese yen. So which means that it removes risk from the market, market is more more prone to risk. So they're more open to risk and the whole risk aversion is gone. And that's why we're seeing the yen crosses push up so much, because it was last week that they started doing this, and now they're continuing on with this theme. Today, President Trump tweeted about putting a team together to have conversation or these talks with North Korea. So which shows that both parties are willing to talk, which is positive for risk, which means the risk on environment is on, and the safe haven currencies don't do so well in the risk on environment. They do better in the risk off environment. So what do we see here? Even though we see rejection, we are still in this. If we were to remove this, we are in a sideways market. So we have a high, we have a low, excuse me, and the price has been trading between the two. So we went to test the high, dropped to the low, went to the high, dropped to the low. Now that we had dropped to the low, we're pushing back up. So I would expect the price to go towards the top of the range. So we're in a range-bound market, looking for price to go up higher, and 107.11 or 107.20 will be the target to the upside, which is basically where that one is. So bias will be to the upside in a range-bound market here. So if we take a look at 1 hour, we can see price is pushing up higher. Dollar yen is interesting to trade, so I would be careful with this one because US dollar is getting pressured into weakness on one side. whereas yen is weakening as well. So this is sort of in between. All right, so let's take a look at Aussie yen. Aussie yen, big doji, which means big pin bar here. I would expect the price to drop from here, and the target would be 83.20 level. Now, because other yen crosses are pushing up, this could push up as well, and we could see price do one of these. So the best level, if you wanted to trade this, would be into 84.10 and looking for a reversal there. Because overall here, the bias is to the downside based on the daily, and I'm looking for a drop, but we could see the price go and test this 84.20 level once again. So be mindful of that, but the bias would be to the downside. CAD yen had a beautiful double top, as Anita pointed out today, and the whole announcement by Bank of Canada pushed it lower. So the bias for this one is to the downside. This is probably one of the only yen crosses which actually had, let me take a look, which actually had a bearish candle close. Yeah, this was the only one that had a bearish candle close. So with this one, my bias would be to the downside. But again, keep in mind, it's just not one currency playing a role. It's two different currencies. If yen continues to weaken, all the yen crosses will go up. And CAD yen is one of those currencies. But for now, based on the daily analysis, the bias will be to the downside. We could see push into 84.50 and then a drop from there. Or we could even see the price go all the way into right over here, this previous support and resistance area at 82.80, and then do a drop from there. So we could see one of these move to the downside, but the bias is to the downside, and I'm looking for price to come back into the bottom here, into 81.40 level. So bias is to the downside, but be mindful of those pullbacks. New Zealand yen. So we have a big pin bar, which is about the same size as the candle body here. So with this one, the bias is neutral. This one could go either way, depending on how the yen reacts here. So the big pin here shows that the bias is to the downside, but we are running into resistance. So we could just see one of these moves. So price could go into this previous support and resistance and bounce off of that. Right now, yen looks weak, so everything is pushing up, but my bias here would be neutral. So my base case scenario will be this. But again, if it breaks up to the upside, then I would expect it to go test the high here, which is back into this 78.60 level, and we could see price go all the way up. But again, my first place I would look for a reversal would be at 78.33 level. All right, so that's all I have. Any questions or anything to add there? Okay, if not, we will call it a wrap. You guys have a wonderful evening, and I will see you in the morning. So this week, our London session is at 4 a.m. Eastern because of the time change. So I will see you then. Bye for now.